Hello, traders. It is 8:02 a.m. on Wednesday, the 20th of February, 2019. We're here for another Trader Bite, so we'll make this very quick again today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market stance is relatively neutral. Uh, we have a mixed bag. Crude is off by 54 cents, trading at 55.91 or so, 92, or down almost 1%. The leader today is the DAX, the Euro stocks, and NASDAQ up 0.59%, 0.31%, and 4.14% respectively. There's a mix. Bonds are down 2 ticks, but the 10-year notes are up two full ticks or so, and so on. So we're seeing a market that is in a neutral position coming in. We're trading right on top of the overnight point of control in the ES, which is a further indication that it really hasn't done much. The overnight range is inside of yesterday's range. There's not much new information to price in this morning. And so it's sideways in this area. Note that we are stuck on top of that 27.7750 in the vicinity of yesterday's close, which was around 27.7850. We are just sitting sideways in the ES. So that's where we are. In terms of what's potentially ahead, the market's expecting the FOMC minutes today at 1 Central, 2 Eastern. Looking for a fairly important release there. Consumer confidence comes out at 10 Eastern for Europe, expecting a negative 7.8, prior is negative 7.19. Red Book came out strong this morning, and there was a PPI out of Germany, which came in strong as well, 0.4% versus the expected negative 0.2%. Prior is negative 0.4. So seeing a reaction there. That's pretty much it. Looking at the news feeds, the news wires, really the biggest thing is the China-U.S. talks. President Trump saying that the talks were going well. March 1st was not a magical date, and that China's racing to avoid having tariffs go up. And China's chief diplomat said that he would like to see that the U.S. is respecting China's ability to grow. China's making moves towards opening up its markets to the world. So some positive things there potentially, but it's politics, so who knows. Let's take a look at what was expected yesterday. Yesterday, the main idea yesterday was the expectation that we are likely to push up into the 27.73 area and then come back to the open and then break lower. Did not happen at all. The market had just a different idea. Was looking for higher, and then the secondary expectation is a push through the low and then a test of the mid of the gap below, and then and then a return towards the middle. And so we didn't get that either. What we got is basically scenario number 3, which is a small test, a quick test down, and then a push up. Yesterday morning's action was a bit of a drive, so there was no real OS here. I was demonstrating something yesterday in our trade talk at Convergent, and that's the OS from that day, from Friday. But what we had yesterday is the market open tick down 1 tick and proceeded to push directionally higher without a single 7-tick pullback for the first 15 minutes. So for the first 15 minutes, we had a directional push without a single 7-tick or more pullback. You don't see that often. So yesterday was a bit of a grind. Yesterday behaved like an open drive from value, but in a kind of a slow motion way. So tough trade there. There were really no pullbacks. I don't have a way to jump on a um, a trend and a breakout trade. But it's clear to us that the market had no sellers in it. It could only muster up a tick from the open. So yesterday's low is 27.66 versus 27.66 and a quarter. Um, for the Open. So this was, very early on. I warned that shorts are likely to get crushed, especially beyond 73. 73 was important to note, and then it pushed it pushed right into Friday's high at 77.50 to the tick before pulling back to the mid to the tick. Trade I missed. There was just not enough for me to trigger off of there. But it pushed to the tick. What does this mean when it pushes to the tick on these day type levels? What's the potential meaning here? The potential meaning is that day levels are being respected. Day time frame is probably in control. Expect chop, expect the grind, the directional grind, if anything. And that's basically what we got. I actually expected the market to bounce off of the mid to the tick here and make an attempt at the high right there, 77 and a quarter, missed it by a tick. And I actually expected this to push back and then to go sideways before it decides to break the IB high, most likely with a double top, an interday double top, meaning 2 days, two separate days. Um, Having a double top, the expectation is that double top is likely to go before the end of the session. So I would have expected and was really preparing myself for a balance inside of the IB and then a break higher through the IB for a push towards 27.80 potentially. It ended up pushing to 27.8750, 88 and quarter is the MC low volume node. So with that being said, once it broke the IB, this is where that IB setup that I shared on Futures TV would have worked nicely. But once it broke the IB, I was looking for a pullback to the IB. No such thing. I mean, the only test of mid was right here. It showed significant strength yesterday throughout the day. So we did have a continuation move. You notice the delta is just buyers are aggressive all day long. And if you look at the rotations, 7.25 versus 1.75, which resets it, then it pushes to 4.25, pulls back 375, and so on. You'll notice that the throughout the session up until about this point here, buyers are dominant in the rotations. The rotations up are higher than the rotations down. Rotation up, rotation down, rotation up, rotation down. Changes a little bit here, and then that's negated. And then so it was a little bit choppy, but overall, when you look at the condition or the health, the internal health of the auctions ebb and flow, buyers had it. So I didn't look for shorts at all yesterday, especially not with the kind of open that we had. I wasn't interested in taking shorts, and the longs were slim pickings yesterday. The longs had to be scalp longs. There was one right here. Oop, why is that gone? There was one right there, a scalp long to a pullback area on a collision, and so on and so forth. The kinds of setups that I would talk about for scalping, not for a structured trade. So that was yesterday. Looking at the overnight session, let me bring this over here and switch it back to what it's supposed to be. 15 minutos. Okay, so we open up where we close, and we test the point of control. We end up with a triple distribution profile yesterday, triple distribution overnight profile yesterday, if you recall. Wow, that's horribly drawn. Triple distribution overnight profile. Uh, and we end up with a normal variation day. This was not a trend day, really. But we test the point of control, we pull back, and then just go sideways. Even when Europe opened right in here somewhere, there was not much going on. Look at that profile, 160,000 contracts traded, which is pretty much in line with what we would consider to be normal, uh, with a completely compressed overnight profile. There's just boy, uh, the overnight session was just consolidating throughout the night. So those guys watching this product in the Globex session did not get much of an opportunity to do anything. Didn't really test anything. It's just sitting sideways. This creates a very tricky open. So let's take a look at what we're expecting for today. Now remember, a lot of what is going to be important today has to do with the FOMC minutes. So um, it's kind of secondary to the FOMC release, but we get to get a glimpse of how the meeting went and how the decisions were arrived at, what the governors were looking at in terms of the economics of the market. So this morning, opening inside of yesterday's range. There's truly no value yesterday, but we're opening in the bulk of where the volume took place. I'm looking at an open auction today. I'm looking for to make an attempt higher. I'm looking for an impulse down to take out the overnight low and to begin to drift down. There are multiple indications that the market's a little extended, in my opinion, just looking at how the VIX is responding to the moves up. The VIX is not dropping. It hovered around 16.5 yesterday in the futures all day, despite the run up. And there are several other indicators that tell me that there's really no commitment and not much more commitment to the upside. This doesn't mean that I'm a bear. This doesn't mean it can't go up. Don't look at it that way. But temporarily, for the short term, it would look to me, if you imagine a flow of water down a hill, it seems like the flow would be a lot easier to the sell side than it is to the buy side. Although water can defy gravity in the markets. So it's just looking at what is more easily facilitated potentially. It would be to the downside at this point, given the underlying indications. Okay, so I'm looking for this to test yesterday's low and then push through, and then we have the FOMC minutes coming in, and who knows, it could pop, it could drop, I don't know. But my primary scenario today is to look to fade, especially on an open auction. If we get an open auction and we start to push up, I'm looking to fade that first push. I'm looking to sell the first push, looking for a rotation through the overnight low and a push down. Now remember, the overnight is fairly compressed on pretty good volume, normal volume. So I expect that there's likely to be a break one way or the other this morning, and I'm looking to the downside. The secondary scenario is we hold steady, we drift down into the overnight low, test down, impulse up, push to the overnight high, and begin to drift up. Yesterday's high was not entirely an excess, so it gives us a little more room to push higher into this. And the 2800, by the way, is well within range at this point, of based on historical volatility. 2800 is the first closing sigma up, so 2800 is well within range. And then as we consolidate into the FOMC, we might see it push in and through 2800. I expect it to push to probably 2805 or so before it sinks back down um, on the test. So there's a potential there that we could drift up, hold steady, get the FOMC, push to 28.05, and then come back a little bit before the next move. So it's hard to say with the FOMC in play. So this is the FOMC minutes. That's what this line is for. It's just a toss up how the market might react once that 2 o'clock number comes out. Okay, so I hope that makes sense. Good luck today, and I'll catch you tomorrow morning. Take care.